Hi, everybody. Hope you're well. We're just waiting for a few more people to join before we begin. Thanks for your patience.
Good afternoon, everyone, and a very warm welcome to our webinar today on ESRM Readiness 2025. My name is Rohma Arshid, and I'm the Sustainability Lead at Resources Future. I would like to take a moment to introduce Resources Future to everyone. We are an advisory firm working in the domains of ESG, climate policy, and carbon projects across South Asia and other regions. Before we begin, I would like to mention that the recording of this session will be available on our YouTube channel. I will link the YouTube channel as well as other contact information in the chat box below for everyone to access. Please, if you have any questions or queries in the meanwhile regarding the presentation or any other questions, feel free to type it in the chat box and we'll address it at the end of the webinar. So thank you. And without any further ado, I invite Amara, today's speaker, to start the webinar.
Hello and good afternoon to you all. My name is Ammarah Arif Arain, and I'm representing Resources Future. And I work here as a sustainability analyst. Before we jump into today's session, I'd just like to take a moment to share a quick snapshot of the broader capacity building services we offer here at Resources Future. As you'll see here, our work spans the entire ESG and climate finance landscape, from ESG disclosures and green finance to carbon markets, risk assessment, and of course, ESRM. Today's session is specifically focused on ESRM, but if your institution is also working towards IFRS S1, S2 reporting, climate risk analysis, or engaging in carbon finance, we'd be happy to support you through our tailored trainings or technical assistance. And I'd just like to say that this is part of our broader commitment to helping financial institutions build the internal systems and capacity they need to meet both the regulatory requirements as well as market expectations. So before we move on, let's just take a quick look at what we'll be covering today. So, this session has been structured to first set the global and national context for ESRM. Then, I'll walk you through key frameworks like the IFC performance standards and SBP Circular number 12 of 2022. We will also explore the ESRM implementation manual.
Amara, sorry to interrupt, but we have an issue. Zarak is saying that your voice is very low.
Can you all hear me properly now? Please feel free to use the chat box to let us know and stay in touch with us in case you guys are facing any um, voice issues. Shall I continue? Is that clear? Yes. Great. Thank you, Roma. So basically, I will explore the ESRM implementation manual in some detail so that you can leave with a clear understanding of how ESRM works in practice, screening, due diligence, monitoring, all of it. And towards the end, we'll discuss where the sector currently stands, what common implementation challenges look like, and what steps your institution can take to get ready before the 2025 deadline. So, whether you're just getting started or are already working on ESRM internally, there will be insights for everyone here. With that, let's begin by understanding why ESRM is being prioritized, not just globally, but here in Pakistan.
Amara, I'll have to interrupt you again. Another participant is
Saying no
saying that
sound.
there is no sound.
Can you hear me?
I can.
Um, Hi, Mohammed Adnan. Have you connected to the audio? Because once you log into Zoom for the meetings, you have to join and connect to audio. So maybe that's why, because my colleagues are being able to hear me. Is any other participant facing this issue? Again, please feel free to use the chat box to let us know. It's fine. Okay. So, as I was saying, let's take a look um, by examining why environmental and social risk management, also known as ESRM, is now required focused for financial institutions in Pakistan. So traditionally, ENS risks were viewed as non-financial, but in today's practice, they can significantly impact a borrower's legal standing, cash flow, market access, and operational stability. So, whether it's an industrial borrower facing environmental non-compliance or a client engaged in unsafe labor practices, these risks eventually translate into default potential, reputational damage, as well as regulatory exposure. Recognizing this, State Bank of Pakistan began formalizing its sustainable finance strategy with its green banking guidelines that were, related to uh, are others listening to voice? Yes, Mohammed Adnan Saab, others are being able to. Maybe you can rejoin again. So recognizing this, as I was saying, State Bank began formalizing its sustainable finance strategy with the green banking guidelines back in 2017. And these guidelines encouraged banks to integrate environmental and social considerations into lending decisions and product development. That policy foundation further then elevated in 2022 when SBP issued circular number 12, making ESRM mandatory for all banks and DFIs by November 2025. And 3 years later, here we are just at the brim of the guideline. So, unlike earlier guidelines, this circular is enforceable and supported by a detailed ESRM implementation manual. This manual was developed in technical collaboration with the International Finance Corporation, IFC, ensuring that ESRM framework introduced in Pakistan is globally credible and also operationally aligned with best practices. Most importantly, SBP now considers ESRM as a component of core risk governance. At the same time, um, it levels itself as credit, operational, and reputational risk. It is not, I would say, a CSR issue or a sustainability branding. It is now a regulatory expectation tied directly to lending operations. So, throughout today's session, we'll explore how this framework works in practice and how financial institutions can begin aligning their credit systems, risk teams, and supervision tools to meet the 2025 compliance deadline starting this November. So, to understand Pakistan's ESRM framework, it helps to see where it came from, both globally as well as locally. The foundation of most credible ESRM systems worldwide is the IFC performance standards. These were first introduced in 2006 and updated later on in 2012. These eight standards define how financial institutions and project sponsors should identify, manage, and mitigate environmental and social risks. These standards cover everything from labor rights and pollution control to land acquisition, biodiversity, and community safety. They have been adopted by development finance institutions, ESG investors, and also increasingly by commercial lenders operating in emerging markets. So, in Pakistan, this journey began with the State Bank of Pakistan's green banking guidelines that were issued in 2017. And these guidelines encouraged financial institutions to consider environmental and social risks in their credit approval, product development, and governance processes. So, while non binding at the time, they were a key step in introducing sustainability into risk based decision making. Let's fast forward to 2022, and we witnessed the formalization of this agenda through Circular 12, mandating it by November 2025. And what makes this transition significant is that SBP partnered with IFC to actually develop the ESRM implementation manual. And this manual translates global standards into local tools like the environmental social due diligence checklist, supervision templates, and risk categorization methods. So the message here is clear. State Bank of Pakistan's ESRM system is not an isolated policy. It is rooted in global best practices via the IFC, and it has been adapted for Pakistan's regulatory context and now enforceable again under the 2022 circular. So let's now define ESRM clearly, as it's more than just a policy. So ESRM, we can say, is a structured framework that banks and DFIs can use to assess the environmental and social risks that are embedded in their credit decisions. Um, we can say that this system helps identify whether a borrower's activity might lead to navigate to negative impacts and like unsafe labor practices, pollution, or exposure to climate risks. And it also ensures that these risks are understood and addressed before financing is actually approved. So, let me take you through how ESRM functions at three levels. Firstly, at the client level, it does this by assessing the borrower's business practices and compliance history. Secondly, we have the sector level. This is where Some industries are inherently higher risk, like, for example, construction or chemicals. Thirdly, we have the transaction level. This applies especially for large scale or location sensitive projects. So, as you can see, the types of risks considered include environmental degradation, health and safety issues, climate exposure, and more. And these aren't secondary risks. These they can, directly affect credit worthiness and repayment capacity. So all banks and DFIs are expected to now implement ESRM systems as of 2025, November 2025. And this is supported by a full operational manual, the ESRM implementation manual, and it sets out tools like risk categorization guidelines and the checklists. So the structure of this framework, we can say, draws from global standards, particularly uh, the IFC standards, and but it has been adapted for local realities through a formal collaboration. Here, I'd just like to tell you that Resources Future supports financial institutions in making this shift by customizing ESRM tools to internal lending processes, delivering capacity building training, and helping teams use risk data more effectively in decision making. So, this process um, flow kind of reflects how environmental and social risk management is operationalized in practice. Based on the ESRM implementation manual, um, and we can see that each step aligns with internal workflows of a bank or DFI, from loan intake to post disbursement monitoring. Let's take you through it step by step. It starts with initial screening, which is a quick check to flag whether a borrower or project has potential environmental or social risks. This could include factors like operating in a protected area, using hazardous materials, or having poor labor practices. Next comes the risk categorization. Here, the borrower is classified as low, medium, or high risk based on the objective criteria outlined in the SBP manual, such as industry sector location and project scale. This step has been aligned to ensure that it helps determine the level of due diligence that is required. So for medium and high risk clients, a more in-depth environmental and social due diligence is required. And this is where SBP, environmental and social due diligence checklist, comes into play actually. It is a structured tool that guides credit and risk teams through the key questions to ask and documents to verify. Secondly, it ensures banks are consistently identifying risks related to pollution, land use, labor conditions, safety, and more. And thirdly, this checklist is sector agnostic and can be adapted across industries from manufacturing and infrastructure to agribusiness and energy. So, if significant risks are identified, the institution then works with the client to agree on a corrective action plan, or as the manual calls it, the Environmental and Social Action Plan, the ESAP. This document outlines steps the client must take to mitigate or manage these risks during the loan period. Then we move on to loan structuring. This is where the ESAP or other ENS conditions are incorporated into the financing agreement, either as a conditions pre-descent or ongoing compliance terms. And as you can see, the final step is monitoring and reporting. And this is a very essential step, especially as ESRM is no longer a one time assessment. So, State Bank of Pakistan provides a supervision checklist which helps banks ensure that ENS are being followed post disbursement. There is also a monitoring and evaluation M&E template that institutions must submit to SBP annually. And this template covers ESRM implementation progress and aligns closely with green banking guidelines. So here's, I'd just like to add in, here is where we can link IFRS S1 and S2 reporting. So IFRS S1 requires institutions to disclose how they manage sustainability related risks and opportunities. And the internal tracking data from ESRM monitoring can directly support these disclosures. Whereas IFRS S2, which is focused on climate risk, also benefits from ESRM monitoring, as especially where it tracks borrowers' exposure to climate risk and mitigation efforts. I would just like to tell you all that in this webinar, we're helping institutions also understand how ESRM isn't just about managing risk. It's a practical way to prepare for IFRS S1 and S2 reporting. So, by embedding ESRM into credit processes, banks generate the data and governance that is actually needed for these sustainability disclosures. And it's a smart way to meet both SBP and SECP expectations by using one integrated framework. So ESRM isn't just about managing the bank's risk exposure. I'd say it also allows banks to be a value-added partner to their clients. When you conduct ENS due diligence or require ESAPs from clients, you are actually helping them take the first step towards the kind of sustainability governance and data that IFRS S1 and S2 actually require. The positions um, so this, I'd say, positions banks as an enabler and not just as lenders. So it's something to think about. So at Resources Future, we help banks integrate these tools not just as a compliance checklist, but also as part of their broader risk and credit disclosure ecosystems, ensuring consistency across ESRM, SBP requirements, and the upcoming IFRS obligations. So now that we've seen the process flow, let's take a look at the specific tools State Bank of Pakistan has provided to help financial institutions actually operationalize ESRM. These tools are part of the ESRM manual and available to all regulated entities. They are designed to actually integrate credit risk directly into compliance and supervision systems. So the first is the Environment and Social Management System, the ESMS. This defines an institution's internal governance for ESRM, who is responsible, how decisions are made, and how procedures are actually documented, and how they link with the credit risks. Then, moving on, we have the risk categorization guide. This actually helps in classifying borrowers or transactions as low, medium, or high for ENS risk. This classification further then influences how much due diligence is needed and whether supervision is required post disbursement. Um, so, for medium and high risk cases, banks are usually required to complete the ESDD checklist. This is one of the most important tools, and it ensures a structured assessment of compliance risks that are related to pollution, land use, labor rights, safety, and more. So, if the checklists reveal significant risks or gaps, the borrowers must agree to an environmental and social action plan, the ESAP. And this is a time bound, measurable plan that addresses the issues that are identified during the appraisal. Uh, so moving on, after the disbursement, banks use the supervision checklist to track whether ESAP is being implemented and whether the client is staying compliant with the ENS terms. Um, Moving on, finally, all institutions must comply an annual monitoring and evaluation report using the SBP prescribed template. And this is submitted directly to the state bank, and it serves as evidence of system-wide ESRM implementation. I'd like to tell you that these tools aren't theoretical. They're built into the SBP framework and are expected to be used. Here at Resources Future, we work with banks to tailor these tools to sector-specific contexts and train staff across all departments, credit, risk, legal, on how to apply them effectively and efficiently. In short, I'd like to say that State Bank of Pakistan has not just set a policy, it has also provided the operational toolkit needed to comply. The responsibility, I must say, now lies with institutions to embed these tools into core lending and supervision processes. So, moving on, let's take a look at how ESRM works in practice and not just in theory. These are in on this page. I'll show you some examples of financial institutions in particular that have integrated ESRM tools into their operations and what kind of business or risk benefits then resulted. Firstly, we have the example of the Bank of Punjab, which offers a great local case actually. And through alignment with the State Bank of Pakistan's green banking guidelines, Bank of Punjab has embedded environmental risk screening into its renewable energy credit lines, particularly for solar, biomass, biogas systems. This has further enabled them to offer concessional products while also aligning with Pakistan's NDC goals on increasing the share of renewables to 60% by 2030. Another case, the IFC investment in Engro's energy third project required the client to apply all 8 IFC performance standards. And the ENS due diligence then covered water scarcity, emissions, and stakeholder engagement. This was done so that mitigating long term ESG risks can be done while also keeping the project bankable. And this is an important parallel as Pakistan's ESRM manual is based on these same standards. Thirdly, um, at the institutional level, HBL participated in SECP's 2023 ESG reporting pilot. While focused on reporting, HBL did use ESRM generated data to support its disclosures. This type of integration is exactly what is needed as IFRS S1 and S2 are becoming mandatory in Pakistan for listed entities. So moving on, lastly, I wanted to give you guys a regional example. So, looking regionally, Bangladesh Bank introduced ESRM, um, introduced environmental risk management guidelines in 2011. And this further helped building upon, um, made the bank environment and social risk management mandatory in 2017, which was there to enhance the framework to a comprehensively address both environmental and social risks in the financial sector. All these cases show 3 things in common. Um, Firstly, they show that it enhances risk pricing and portfolio resilience, builds capacity for climate and ESG linked financing, and lastly, it aligns banks with both regulatory and market expectations. So at Resources Future, we use these examples in our training and advisory sessions to help teams internalize what good ESRM implementation actually looks like by sector, transaction type, and institutional goals. Let's move on to our next slide. So let's be honest, implementing ESRM isn't frictionless. And most institutions in Pakistan, we can say, are still at early stages of adoption, and there are both operational and perception based barriers. So implementing ESRM in Pakistan isn't actually without its challenges, but it also unlocks major strategic opportunities. On the challenges side, many institutions face internal capacity gaps, especially in the risk and credit teams, and integration into core systems is uneven. And there is still a perception that ESRM is just a compliance checkbox rather than a risk and performance tool. However, there is a real upside potential. First, State Bank of Pakistan has already developed the operational tools from categorization to reporting. So banks won't be starting from point zero. Second, there is a growing demand from investors and regulators for ESG aligned portfolios. And strong ESRM systems do allow banks to meet this demand while also protecting their own exposure. And we can say perhaps the most strategic opportunity is that ESRM data and systems can be leveraged to support the compliance with IFRS S1 and S2, which are being rolled out by SECP starting mid 2025. These reporting standards, I would say, require institutions to disclose how they manage sustainability related risks. And we can say that ESRM gives you that exact visibility. So, ESRM again isn't just about managing the downside risk. It's about preparing for what's next in both risk governance as well as regulatory reporting. In the next slide, we'll actually look at how ESRM and IFRS S1 and S2 work together and complement each other, and how institutions can integrate both these frameworks without duplicating their efforts. And let's move on to our next slide. So, with ESRM becoming mandatory under SBP and IFRS S1, S2 taking effect via SECP, the main question for financial institutions now is not which one first, but it's how do we align both together. So, ESRM is an internal risk tool, and it enables institutions to categorize clients, assess environmental and social exposure, and develop action plans for high risk projects. ESRM is grounded in local policy but also globally aligned through IFC performance standards. Moving on, IFRS S1 and S2, on the other hand, are both external disclosure frameworks, and they require listed companies, including financial institutions, to report how sustainability risks affect their governance, strategy, and financial performance. So, this includes metrics on climate exposure, emission transition plans, and risk oversight. So here is the key. Much of the data that is needed for IFRS reporting already exists inside ESRM systems. That is, as ESRM risk ratings and monitoring feed into IFRS S1's risk management disclosures, whereas ESRM's climate risk tracking supports IFRS S2 requirements on physical and transition risks. Lastly, State Bank of Pakistan's M&E template can help inform investor grade disclosures with minimal additional effort. So instead of building separate processes, institutions that embed ESRM well today are strategically positioning themselves to meet IFRS obligations tomorrow. At Resources Future, I would just like to add in that we support institutions in aligning both systems through a shared workflow, integrated tools, and joint training sessions, helping risk and reporting teams speak the same language. And as regulation evolves, ESRM is no longer um, siloed ESG exercise. It's becoming the foundation of credible, audible, and sustainably linked finance. So let's move on. After looking at how ESRM supports IFRS S1 and S2, I'd like to just take a step back and acknowledge the global standards that sit at the heart of Pakistan's ESRM framework. These are the IFC performance standards, and they are now a global benchmark for managing ENS risks in private sector financing, used by development banks, ESG investors, and also increasingly now by commercial lenders worldwide. Each of these eight standards focuses on a specific risk area, from environmental and labor issues to land rights, biodiversity, and cultural heritage. Um, so when in 2022, when State Bank of Pakistan formalized its ESRM manual, as mentioned earlier, it did so in partnership with the IFC, and using these performance standards was the core foundation of the manual. And that's why ESRM manual includes both tools like the ESMS framework, ESDD checklist, and risk categorization, because they're modeled on these globally tested standards. These same standards, I would say, also support sustainability reporting frameworks like IFRS S1 and S2. And since they provide the raw data and governance mechanisms that are needed to disclose risk exposure, climate impact, and stakeholder engagement. So, in practice, when a Pakistani bank applies ESRM, as per SBP guidelines, it is applying the IFC performance standards, which have been locally adapted, regulator backed, and globally respected. And I'd just like to tell you that Resources Future uses these standards as a technical basis for developing credit policy, staff training modules, and sector specific ENS risk guidance across our financial sector clients. So, ESRM, as I mentioned earlier, is not just about managing your internal risk. It's actually a tool that helps financial institutions contribute to national climate goals. Um, so, Pakistan's updated nationally determined contributions, also known as NDCs, commit to a 50% reduction in projected emissions by 2030, with 35% dependent on international support. So, the key targets here include increasing renewable energy, improving water management, enhancing climate resilience, and conserving forests along with biodiversity. Here, I'd like to tell you that ESRM helps operationalize these goals by screening for projects that involve clean energy, reforestation, or climate smart agriculture. Banks can also actively support mitigation and adaptation goals. Secondly, ESRM also ensures that high risk projects, like those projects that are in flood zones or involving deforestation, are flagged and either avoided or properly managed. Moving on, the SDGs are also aligned. ESRM kind of promotes better practices in areas like water use, which is SDG 6, clean energy access, which is SDG 7, and decent working conditions, which fall under SDG 8. And lastly, climate action, which is SDG 13. These, I would say, are not abstract goals. They actually influence how projects are financed and which ones are eligible for concessional support. So, I would say for banks looking to access green or blended finance, ESRM is highly essential. And many international climate funds, impact investors, and DFIs require strong ENS systems before they will co finance or guarantee any deals. Here, I'd say that ESRM provides the due diligence infrastructure that meets these global expectations while also making Pakistani banks credible. Lastly, ESRM allows financial institutions to assess climate related exposure across their portfolios. I'd like to give you an example here. For example, banks can start identifying which borrowers are vulnerable to drought or flooding and adjust their lending strategies accordingly. This is a key step in climate resilience and financial risk mitigation. We also help clients link their ESRM implementation to financial readiness and help our clients enabling access to new sources of capital while also supporting national climate goals. So let's talk about integrating ESRM into credit risk workflows. Um, So, for ESRM to be effective, it must be integrated into your bank's existing credit and risk management systems and not treated as a parallel track. This means that every stage of the credit life cycle should reflect ENS considerations. Um, this can start by modifying credit appraisal templates to include ESRM screening questions. These may include whether the client has environmental permits, operates in a high risk sector, or is subject to community complaints. So doing this ensures that ESRM isn't skipped or siloed. Then ensure that your MIS or credit management software tracks ESRM variables, including the borrower's risk category, which is low, medium, high, um, and whether the ESDD checklist has been completed, and if an ESAP has been agreed upon. These data points should be accessible to both risk and monitoring teams. Um, and a key opportunity here is to connect ESRM outcomes to your internal credit scoring models. For example, a project flagged as high ENS risk without mitigation plan could automatically trigger a credit downgrade or require additional approvals. Finally, I'd say that ESRM needs to be a collaborative process. Risk teams validate assessments, compliance teams should be checking alignment with the SBP circular number 12. Credit teams should incorporate ESRM outputs into loan structuring, and lastly, monitoring units should oversee ESAP progress. We at Resources Future also help banks design these workflows, map their ESRM integration gaps, and train cross functional teams to speak the same language when it comes to ENS risk and credit. So, as we all know, ESRM is now mandatory and will begin full implementation across all credit functions by late to 2025. Banks and DFIs are expected to demonstrate that environmental and social risk considerations by embedding it into their decision making process and not just treat it as an add on. The first requirement will actually be the annual reporting, and institutions must submit monitoring and evaluation reports using SBP's official template, as mentioned earlier. These reports will detail the number of projects screened, their risk categories, due diligence status, and monitoring outcomes. Secondly, banks should prepare for on site ESRM supervision. SBP examiners may request ESRM related documents during these routine audits, such as credit files showing ESDD, checklists, and ESAPs, and internal review comments. Thirdly, SBP expects to see a documented ESRM, not just a policy document, but evidence that it is actually being integrated into real decision making. This will include credit appraisal forms, risk systems, and reporting dashboards. Finally, SBP will assess whether the institutions are actually using the ESRM tools provided in the manual, such as the risk categorization guide, supervision checklist, and action planning formats. Tick box compliance here just won't be enough. Actual use and result will matter at the end. Um, so implementing ESRM isn't just about having the right tools. It's also about building the right internal capacity across your institution. This will mean ensuring that staff at all levels, from frontline officers to the boardroom, understand how ENS, ENS risks affect lending, compliance, and strategic direction. So, first, let's talk about who needs to be trained. Well, training shouldn't be limited to ESG or sustainability units. We suggest it must include C-suite and senior executives, as ESRM affects governance, reputational risk, and long-term portfolio exposure. Secondly, credit officers and relationship managers. These are a definite because these are the people who actually screen clients and structure loans. Thirdly, we have the risk and compliance teams. These are teams who validate assessments and ensure SBP alignment. Then we have the product and or green finance teams. This is especially where ESRM links to climate related lending. So these are where the training should be and who actually fits it. So moving on, as for what the training should cover, we suggest that it has to go beyond theory, and teams need to understand that full ESRM processes that are defined by SBP, from screening to monitoring. Secondly, how to use these tools that have been issued. Thirdly, sector specific risks, for example, emissions and wastewater in textiles, or pesticide used in agribusinesses. Lastly, and importantly, how ESRM supports IFC performance standards and enables IFRS S1 and S2 aligned disclosures. Now we can look at how this training can be delivered effectively. Uh, Financial institutions here in Pakistan have a few strong options. You can start with in-house workshops and simulations that are useful for embedding ESRM into real-world decision making. Secondly, NIBAF-led sessions and IFC-supported programs provide formal learning and cross-bank knowledge sharing. Lastly, I would like to say that there is also technical support available from partners like Resources Future. We do offer ESRM gap assessments, customized design toolkits, and team based training that is tailored for your institution's credit workflows, risk appetite, and sector focus. So I'd just like to add in here that the key message here is don't wait. Capacity building is not just a compliance exercise. It is actually what will enable ESRM to actually work in practice. And it's a given that institutions that invest early in training will be best positioned to meet the November 2025 State Bank deadline, improve their credit quality, and further set the foundation to unlocking green finance opportunities. I just want us to take a quick look at the compliance timeline set by SBP under Circular 12. The ESRM framework was introduced in November 22 with a 3-year window for institutions, and this 3-year window is now closing down soon. Through 23 and 24, banks were expected to develop policies, align internal workflows, and pilot ESRM tools, while also beginning building their capacity. And now, by early 2025, institutions should be in the full rollout phase. And there are some local banks that we know are doing this, whereas some are still a little behind. So using risk categorization, ESDD checklists, ESAPs, and reporting templates should be easily applicable through transactions now. Just a reminder, the compliance deadline is November 2025. By then, State Bank expects banks and DFIs to demonstrate that ESRM has been fully integrated into credit decision making and monitoring. Now is the time for institutions to conduct their ESRM gap assessments, identify their training needs, and prepare for upcoming SBP supervision. I would just like to thank you all for staying with us through this session. I'd say we've covered a lot from the foundation of ESRM to its alignment with SBP requirements, climate goals, and even how IFRS S1 and S2 are in synergy with ESRM reporting. So the key takeaway here is that, again, ESRM is not just a compliance box. I will highly encourage you guys to use it as a practical tool to manage your credit risks and enable ESG aligned lending while also preparing for a more transparent financial future. What's needed now is action, and this is where you can review where your institution stands today, identify gaps in policy, process, and people. Lastly, you can also start by embedding ESRM where it matters most, and that is your lending decisions. So, once again, if your teams need help assessing readiness, training staff, or operationalizing ESRM, Resources Future is here to support you with tools, workshops, and technical guidance tailored to Pakistan's regulatory context. Um, so I'd now like to open the floor for any questions, thoughts, or example from your own institutions. So please feel free to use the chat box. And apologies in advance if we miss anybody's questions since we are running out of time. But please feel free to get in touch with us on our LinkedIn, or you can email us at info@resourcesfuture.com. Before we close, just a quick heads up, our next webinar is on questions on carbon markets, and it'll be happening on the 3rd of June. It is a live open format session to help project developers and anybody interested to unpack FAQs around registries, MRV, costs, and more. We hope to see you there. Please feel free to now leave in your questions in the Dropbox, and I will just go through them. I see that there are no questions in the chat box. So if you guys have any questions in the future, please, feel free to get in touch. We like discussing things with people who are actually in the market and doing things practically. Thank you all once again for attending our session. Allah Hafiz. Thank you.